No, sir. It will be fine now.
Okay. Respected today resource person, Ganesh Prabhu Palakumar, Chartered Accountant, dear faculty members, research scholars, students, and other participants. Very good afternoon, all of you. It is my pleasure to welcome everyone for the 9th day sessions. Today topic is GST annual return. In the sessions, annual return of GST, audit requirement, compliance, and reconciliation statement will be discussed and demonstrated in practical way with examples. The sessions will be more live, informative to the participants. I hope that you will enjoy and enrich your skill and knowledge through the sessions. On behalf of Bharatiya University, I feel honored to welcome resource person Ganesh Prabhu Balakumar, Chartered Accountant, Chennai, for giving a lecture on GST annual return in the today's sessions of this program. I personally thank you very much, sir, for accepting our invitation with your busy schedule with your professional work. I am also delighted to introduce the resource person Ganesh Prabhu Balakumar. He is a Chennai-based chartered accountant in practice. He is specialized in indirect taxes for more than a decade. He is the master trainer of GST, affiliated by Institute of Chartered Accountants of India. He has made more than 350 presentations and trained more than 10,000 professionals, 25,000 students, and other members in GST at various seminars, workshops, and conferences conducted by various organizations across the country. He has contributed in development of background material on GST law and handbook on annual return and technical guide on GST audit developed by GST and Indirect Tax Committee of Institute of Chartered Accountants of India. He is a resource person in ICT Academy, which is an initiative of Government of India. He is a visiting faculty in Loyola Institute of Business Administration and all three professional course institutes such as ICAI, ICAI, ICSI to handle the classes for professional students in the subject of indirect tax laws. He has presented papers on GST and indirect taxation in the SARC of ICAI, Commercial Tax Staff Training Institute, Tamil Nadu, National Academy for Customs Indirect Taxes and Narcotics, CGST Department, SGST Department, Society of Auditors, Association of Chartered Accountants, Chennai, International Chamber of Indirect Tax Professionals, and etc. He was the Vice President of International Chamber of Indirect Tax Professionals. He regularly writes articles in reputed financial dailies and participated in various shows and debates in television. He won first place in All India 5th quiz competition for ICAI students conducted by ICAI. He has also acted as a resource person for the RUSA sponsored 10 days online national skill development program on GST registration, assessment, filing of returns, Base 1 and Base 2 conducted by Department of Commerce and Bharatiya University. Today, he devotes his time with us. I request the participants make use of his experiences and knowledge from this session. I heartily welcome everyone. I thank you all for your kind cooperation for success of this program. I cordially invite today's resource person to address in today's session, sir. Welcome, sir. Ganesh Prabhu, sir.
Thank you. Thank you, sir. Thank you.
Thank you, sir.
It indeed always been a pleasure to be associated with Bharatiya University. I still remember once the lockdown was over, with my fellow senior chartered accountant Murli sir has coined a program and told me you have to handle this session. and thereon the beginning, the journey has begun. Where interesting to note this, now we are on the third session, session after session, various improvements, various learnings, and sharing of knowledge happens, and internally a lot of understanding and takeaways are there for all of us. As far as today's discussion is concerned, we will devote a large amount of time on a document called as annual return. What is this annual return? Who has to file this annual return? What is the need or the purpose of annual return? Are there any other aspects that need to be considered? In case there are errors, mistakes, omissions, error of commission, all that are done during the year while filing GST returns, which is something very important. In case there are errors of that nature, can those errors be corrected while filing this annual return? A clear discussion about that, plus no doubt as part of GST audit under GST law, a reconciliation has to be drawn between the financial statements and annual return. Very interesting to note, credit side of P&L account is not equivalent to the number that is reported in GSTR1. In other words, what is reported in GSTR1, not all are credit side of P&L account. As simple as that, under the GST law, if a goods moves from a head office to branch office, is treated as a supply, but from an accounting perspective, that is treated as a stock transfer. So to that extent, my GSTR1 and financial statement will have differences. So this is just an example. Like this, we have sale of capital goods. We have certain incomes that will not form part of GST, or it is not leviable to GST. There are many reasons. There are absolutely many reasons associated why there are differences. All those differences analysis we can discuss as part of those reconciliation statement. Coming back here, making the initial discussions relating to annual return. Let's take up or get into the applicability of annual return. As far as the applicability of annual return is concerned, annual return is applicable. Annual return is applicable for every person. Originally, annual return was applicable for every person. There are no exclusions associated with it. Annual return was applicable to every person, came to everyone. Does everybody need to file? And lot of people went and pleaded to government. Our turnovers are all little less. When we file, or this would be an additional burden for us in case of filing all these return. So is there is a possibility of waiver sort was requested by the trade and industry. As part of ease of doing business, what immediately government did is, government has simply waived off filing of annual return for an assessee whose aggregate turnover is going to be less than 2 crores. In case if an assessee's aggregate turnover is going to be less than 2 crores, then very simply to highlight, filing of annual return became optional, not only for financial year 17-18, but also for financial year 18-19 and the subsequent year on the row also. So this gives us an understanding that if a person's annual return, if a person's aggregate turnover is going to be less than 2 crores, then filing of annual return is not mandatory. However, if a person's aggregate turnover is going to exceed 2 crores, meaning thereby where a person turnover is going to exceed 2 crores during the financial year, then filing of annual return becomes mandatory for him. Simultaneously, sometime during March 20 of this year, government stepped in and gave another strategic move where they have simply highlighted, where they have very, very simply highlighted that if a person turnover is going to be, if a person's turnover is going to be less than 5 crores, more than 2 crores, but less than 5 crores, they are exempted from GST audit. In other words, there is a audit called as GST audit, which will be done by a chartered accountant or a cost accountant. In case if a person's aggregate turnover exceed rupees 5 crores. If a person's aggregate turnover exceed rupees 5 crores, then filing of GST audit and reconciliation coupled with reconciliation statement plus the GST annual return becomes mandatory. In case if a person's aggregate turnover is going to be less than 5 crores but more than 2 crores, filing of annual return becomes mandatory. GST audit is not applicable. To the contrary, in case if a person's turnover is going to be less than 2 crores, then filing of GST annual return itself is optional. GST audit is not applicable. What do we mean by GST audit? Section 35 subsection 5 comes and gives powers that every registered person shall do a audit by appointing an independent chartered accountant or a cost accountant in practice and ask them to verify the books of accounts and report are there any non-compliances, are there any observation, are there any shortcomings, are there any errors in the GST audit, plus do a reconciliation between profit and loss account and annual return. So this gives us an understanding. Annual return is going to be a statement which is going to be filed by the management. After annual return is filed, there a GST auditor steps in and the GST auditor does a comparison between financial statements and this annual return. He just tried to match and arrive the differences, if any, and report it accordingly. So those are the broader aspects, a macro aspect associated with all these returns that are going to be filed under GST. The annual return number is titled as Form GSTR 9 and the GST audit and reconciliation statement is titled as Form GSTR 9C, very popularly called as Form 9 and 9C. Moving forward, if in case a person fails to file the return within the due date, originally for the financial year 18-19, due date was 30th June. then it got extended to 30th September, then it got further extended to 31st October, and now it is 31st December 2020 is the last day to file annual return for the financial year 18-19. Normally, what is the due date? In case if you're going to ask me, normally the due date is on or before 31st December of subsequent financial year. Let me repeat. Normally is, for example, if things goes well, but for this testing time, challenging times, 2021, what is going to be the normal due date, sir? 31st December 21 is going to be the normal due date. For 21-22, what will be the due date? 31st December 22. So normally annual return has to be filed within 6 months from the end of the financial. Now, any case, if in case I miss to file the return, what would happen? Nothing would happen. For every day of delay, a late fee of rupees 200 is payable. In case if annual return is not filed within the due date, for every day of delay, rupees 200 will be paid as a late fee. Similarly, if in case annual return is not filed, for which also there is going to be a late fee, but that comes that there is going to be a penalty which that comes as part of the general penalty. Prima facie, for non-filing of form GSTR 9, there is a late fee which operates on a daily basis, 200 rupees, 100 rupees CGST, 100 rupees SGST, which can go up to a maximum of 0.25% of the turnover. Many times we refer that the whole decision is based on a number called as aggregate turnover. What do we mean by aggregate turnover? Before we step into all those other discussions, aggregate turnover means what? I'm sure we would have already discussed about it at various points in time. Once again, it becomes my responsibility to discuss it for a purpose of better understanding. Aggregate turnover is not P&L turnover. An organization's P&L turnover. No, aggregate turnover is not considered as a P&L turnover. Aggregate turnover means it includes taxable supply. It includes exempted supply. It includes zero rated supply. It includes non-taxable supply. That is to say, aggregate turnover equal to taxable supply plus exempted supply plus non-taxable supply plus zero rated supply. If I sum up all these four, let me repeat. If I sum up all these four, I'll get a turnover that would be treated as an aggregate turnover. Why I want to highlight here is many times certain organizations taxable turnover might be less, but their exempted turnover will be huge. There are possibilities where certain organizations exempted turnover is huge, but taxable turnover is very, very less. Now, take for example, an institution like Bharatiyar University. As far as at an institution like Bharatiyar University level, predominant of the supply made by the university are exempted from levy of GST. I do agree there are certain small activities, very minuscule portion of the activity may be done by the university are leviable to GST. That makes the strategic point. Now, when I look a very few money. Let's, for example, say there is a school. That school, of course, school is engaged in an exempted supply. That school aggregate turnover need to be decided through school fees, through imparting knowledge. They collected a fees of, let's say, 1.25 crores per annum. However, they also engaged in certain taxable activities which comes up to 15 lakhs. Now, if we carefully note what is aggregate turnover means, both numbers should be added. Your exempted supply plus taxable supply plus export if I did something plus supplied to SEZ plus something which is not leviable to tax. Yet another classic example could be a fuel station, petrol pump. All those fueling station, that's a turnover of 20 crores, 25 crores, but not even 1 rupee he'll pay GST. Why? Product is out from the tax net. But very interesting to note, in a petrol pump, they will sell oil. Oil is liable to GST. I'm talking of this 2T oil, the engine oil, the coolant oil that are all sold. Those oils are liable to GST. Whereas the petrol, the high-speed diesel, the light-speed diesel oil, which are sold by the organization, that is not leviable to GST. But for the purpose of calculation of aggregate turnover, this all should be added. So someone has to be very clear how a decision to be made. In case if there is going to be a head office and branch office, the movement of goods from head office to branch office should form part of the aggregate turnover. So no, sir, it's not a sale, it's a transfer. It's a transfer for accounting, but it is a supply under GST. An aggregate turnover is a coined term under GST. So those aspects need to be handled in a more better way. Coming back here, getting into the components of Form GSTR 9. As far as Form GSTR 9 is concerned, a form which has 6 parts: part 1, part 2, part 3, part 4, 5, and 6. Part 1 discuss about basic details. Part 2 discuss about outward supply. Part 3 discuss about input tax credit. Part 4 discuss about tax paid related information. Part 5, the most crucial part, which discuss about transactions relating to that financial year reported in subsequent financial year. Followed by part 6, discuss about refund and other matters. Within the bracket, what is given is nothing but the number of table. In total, we have 18 tables. Each table tabulated information are for different purposes. Nothing is same. To start with, when we get in or logged in to the GST site by using a password and the user ID of a respective person, it would pop up to us like this. Some basic information. Name of the concerned person, legal name, trade name, GST number, financial year for which it is going to be filed, and the due date for which it has to be filed. There are 3 system computed informations or auto-drafted informations that are available. I am sure a lot of you are all aware that monthly, And for few assessees, very few assessees, quarterly, a return has to be filed by name called as Form GSTR 3B and GSTR 1. GSTR 1 alone for assessees whose aggregate turnover is going to be less than 1.5 crores. For assessees whose aggregate turnover is going to be less than 1.5 crore, for those assessees alone, no doubt they are allowed to file their GSTR 1 on quarterly basis. Otherwise, month on month, a normal levy person who claims ITC, a normal levy person, month on month will file two returns, Form GSTR 3B, Form GSTR 1. Now, that information, Form GSTR 3B and 1, monthly he filed. But in case he want to see his annual numbers, he can download this form and see his annual number. A GSTR 3B summary which contain details of last 12 returns filed. A GSTR 1 summary again contain details of last 12 returns filed information. A GSTR 9 contain last 12 months return information and online automatic compilation. Let me repeat it. From the GSTR 1 and GSTR 3B filed by a registered person, from the GSTR 1 and GSTR 3B filed by a registered person, information is drawn. Let me repeat. Based on that, information is drawn how your GSTR 9 annual return will be. Based on that, certain understanding is taken, and based on which the system computed summary is prepared. Why we need to be aware of this, or why we need to be bothered about this three documents? As far as these three documents are concerned, often few thoughts would come. See, a lot of us are aware of it. Though for all said and done, individually, sem after sem, mark sheets are available. Now this will be largely relevant to person like me, okay, to some of the senior scholars and faculties who are here viewing. We all have backlogs in semesters, but somehow we don't want to show to the whole external world the backlog that we have, okay, and the way in which we cleared. So for which what we will do is, we will draw from the university a consolidated mark sheet, which will show all 30 papers at one go, and it will say, we'll have a feeling. Otherwise, this sem there is too backlog. Maybe we would have not taken up the exam. We have our own genuine reasons for it. But my point here is, why I referred here is, month on month, GSTR 3B, GSTR 1 is filed. But though month on month, GSTR 3B and GSTR 1 is filed, something very notable, something highly notable, highly respectable to point over here. One. So, point to be highly noted down over here are nothing great. GSTR 3B or GSTR 1 summary, that summary which we are seeing now, will give us over the whole year 18-19, April 18, May 18, June 18, July 18, a summation of all the 3B. A summation of all the GSTR1 will come in the summary return. Why I have to download this? Why I have to refer it? It is a information that how it is reported in the return. Beyond that, I don't find any great advantage in it. It's a conclusive proof how the data has been reported in the system. Coming back here, a few tables are all displayed. Table 4 to 9 will be shown here, then 10 to 18, all attested. Three splits it will have. Coming back here, basic details we have dealt about it in a great way. We will quickly get into some of the presentation and preparation requirements. I will deal this in two ways, some discussion now, some discussion later. One of the highest prerequisite for filing GSTR 9 is this. Form 3B and Form GSTR 1 should have been filed during the financial year 18-19 and 19-20 should be considered as the base for preparation of 9. All those transactions, let me repeat, all those transactions of 18-19, various returns that are there, all the returns for 18-19, preferably GSTR 3B and 1 has to be filed. Then only we can proceed with filing of annual return. In annual return part 2, which contains details of outward supply, inward supply and advances on which tax is payable during the period. So details of outward supply, inward supply made during the year is going to be explained in part 2. Part 2 has two tables, table 4 and table 5. No doubt, every business will have a B2C supply, B2B supply, export of goods, supply of goods to SEZ, receipt of advances, payment as an inward supply on which tax is payable under reverse charge. All these information on which tax is payable, more important, is going to form part of table 4. Now, in other words, this is how table 4 will look like. So too much information is here. Nothing great. Mark my word. Just 5 information. The whole of supply under GST. The whole of supply. Look at my wording. The complete supply under GST can be broadly categorized into 5 types. B2C, B2B, export, zero rated supply, export, SEZ supply. Again, it is also treated as a zero rated supply. All those advances on which tax is payable for all these. Or you can also call it as a deemed export. I would call it as always as deemed export. These supplies can be broadly categorized only into 5 types. B2C, B2B, export to foreign country, export to SEZ, and deemed export. One organization can do only this 5 different type of supply. There is no 6th type of supply at all. So coming back here, where from I will get the information? From the books of accounts of the organization, from the GSTR 1 or 3B of the organization. As I earlier mentioned, let me also repeat it as you see on the slide now. Unless GSTR 3B and GSTR 1 for the whole financial year 18-19 is not filed, there is no point. There is absolutely no point in proceeding with filing of annual return. Without filing April 18 to March 19 return, annual return for financial year 18-19 cannot be filed. So, what are the B2C supply and on which how much tax was paid? What are the B2B supply on which how much tax was paid? How much is SEZ on which tax paid or refund about to be claimed? What is that? We need to know. All those supplies made through, henceforth, is going to be made through or made to your SEZs. How much is those information? So technically what we are doing in GSTR 9 table 4, we are giving a breakup of how much is B2C, how much is B2B, how much is export, how much is SEZ, how much is team export. We are just giving the breakup. Are we going to stop giving breakup at that level? No, we give two more breakup. How much advances was received during the year on which tax paid is how much, plus how much inward supplies on which tax paid under reverse charge. I am sure everybody will agree with me. There is some levy to every registered person under reverse charge. Under reverse charge, am I liable to pay tax as a recipient? Yes. How much amount I am liable to pay and how much I have paid. A culmination of all this information would be table 4 of GSTR 9. Are there any further important points? See, it is a business. In business, two things are common. Always there is a possibility of return of goods. Similarly, always there is a possibility of excess payment, excess receipt, short payment, short receipt, all this. Often this problem will be there in business because they will supply the goods, the customer will reject it. Again, they will redo it and supply the goods. Now, why I want to highlight this is whenever there is going to be a sales return for a supplier, there is going to be a sales return. He need to issue a credit note. Whenever the supplier is erroneously billed and he need to collect excess money, increase the value, he need to issue a debit note. So this credit note, debit notes should also be correctly reflected. Now, when it comes to credit note, debit note, as simple as that, when 1 lakh rupees sale was done to a registered person, straight away in B2B supplies, 1 lakh will be mentioned. On that 1 lakh, 20,000 worth of goods is returned. No doubt 20,000 will form part of the credit note. If you ask me, that is a correct way of reporting. However, government has given an option. If you want, you can put in B2B itself directly 80,000, which is nothing but 1 lakh of B2B supply less credit note of 20,000. Straight away law says you can mention here itself as what? 80,000. We will not object. Come back here. Option to fill net of credit or debit note after and amendments from table 4B to 4F. You are allowed, you are freely allowed. If you want, you can do it. No, we have information, we'll report it separately. Yes, you are freely allowed to report it. But the point that we want to drive here is credit notes, debit notes, and amendments can also be shown net of amendments and credit note, or it can also be shown independently based on the satisfaction of the respective supplier. Having said all this, a next point that comes up for discussion is table number 5. No doubt, table number 5 also discuss about outward supply, but something very interesting to know, where details of outward supply in which during the financial year on which there is no tax payable. I'm sure a lot of you are all aware there is a model called as export of goods. In export of goods, there can be two models: export of goods with the payment of tax, export of goods without payment of tax. What do we mean by with payment of tax, without payment of tax? Nothing great. That is a model. You can export the goods for 1 lakh plus 18,000 GST you can pay to government and claim refund of that 18,000 GST. Option 1. Option 2. You can export the goods saying that I am not interested in paying GST. I will claim credit of refund. Whatever money you paid for purchasing the raw material, let's say 3,000 rupees, you can claim 3,000 rupees refund of ITC. And this money you will not pay tax because it is an export of goods. Now, you also have a model like this. There are models which allow export of goods with payment of tax, export of goods without payment of tax. It is actually up to the individual to decide which model he wants to do. Now, let's take a situation where a person comes up to a situation where he is going to claim the benefit of all those, what is it? He's going to claim the benefit of, nice word, not getting it. Right. Now, where a person decided he is going to obtain a LUT and supply the goods or supply the services to foreign country without payment of tax, where a person very clearly decide that he would supply the goods, supply the service to foreign country without payment of tax. If this be the situation, no doubt, those information will form part of table 5. Not only that, all those exempted goods, all those exempted services, plus all those goods which are not leviable to GST, something like petroleum product, liquor, those information will also form part of table 5. When it comes to table 5, zero rated supply of goods without payment of tax, supplies to SEZ without payment of tax, exempted goods, exempted services, nil rated goods, nil rated services. All this information need to be collected and feeded in here accordingly. Let me repeat. So, organization supply can be only 2 ways. Supply on which tax is payable, supply on which tax is not payable. So both are reported under part 2, table 4 and table 5. Similarly, debit note, credit note and adjustments, you can show it separately or you can also show it net off and show it. That is up to the what is it, assessee to decide. There is no hard and fast rule. In fact, government allow reporting of them subsequently. Coming back here, a question is raised. For the financial year 1920, is it necessary to file annual return if the person's turnover is going to be less than 2 crores? To this query, my response is, as of now, okay, we have a notification issued by the government that less than 2 crores for 1920, the benefit which was earlier extended will get continued. Similarly, for the financial year 1920, if the turnover crosses 5 crores, then only GST audit will also be applicable. This is an October 2020 notification, a very recent notification which came out and just gave, or I would say, just extended the benefit for 1 more year also, not only for 17, 18, 19. This is also extended to 1920. Coming back here, getting into part 3, a very crucial part called as input tax credit. Input tax credit part 3 has three tables. Table number 6, which discuss about availment of input tax credit or taking of input tax credit. Similarly, part 3, table 7, table 7 discuss about reversals, various reversals under GST. And part 3, table 8, most crucial table, a comparison between form GSTR 2A and GSTR 3B, which are automatically done for the year. Coming back here, after the first two tables, where leave the basic information, outward supply on which taxes payable is disclosed separately, outward supplies on which taxes not payable is disclosed separately. That is how the reporting format or the reporting modality would be associated. Coming back here, moving back to table number 6. As far as table number 6 is concerned, the first row of table number 6 is a row that will get automatically feeded by the GST department. There are there are two rows which will get automatically updated, which is row 6 and row number 8. 6A and 8A data will be auto-populated from the GST system. Meaning thereby is what? 6A row and 8A row cannot be touched. Look out this row. You can see a little gray. If the presentation is little more visible to you, you can see there is a small gap, and you can see that the space is filled with gray, which means that table cannot be edited. If it is not filled with gray, if it is white in color, which means table can be edited. But if the table has that gray color, which means it cannot be edited, table number 6A is nothing but a summation of all the credit claimed by the registered person during the period. Let me repeat, all the input tax credit of GST will be reflected in table 6A. Table 6A captures information relating to almost all 12 months information. It is something like this. Month on month, they would have taken credit. No, let's for example take. Every month equally they have taken a credit of 1 lakh, 1 lakh, 1 lakh and 1 lakh. So every month credit of 1 lakh was taken. Now, what we are going to do is very simple. 1 lakh credit is taken. Here in row 6A, automatically 12 lakh will come and appear. CGST 12 lakh, SGST 12 lakh, IGST 12 lakh. Later on, whenever they use it for their purposes, it's okay. Other than their purposes or other businesses, if it is used, then those ITCs are all not eligible. Mainly my contention here is very simple. 6A is automatic table. You can see some large volume of number is there. Those numbers are all automated number, not a manually feeded number. Can I feed 6A and 8A? No. Which is a number automatically comes. No feeding, nothing. No feeding of that data or nothing of that sort associated with it. Followed by 6B. 6B discuss about B2B credit claimed during the period. 6B discuss about B2B credit claimed during the period. 1 month. Just a minute. Coming back here, in case of table number 6, which discuss about input tax credit, as I earlier mentioned, table row 6A and 8A are auto-filled tables. What do we mean by auto-filled tables? See, already 1 year data is filed with the department. This is an annual activity. Because this is an annual activity, month on month they would have taken one credit. That accumulated credit would automatically come and get feeded over here. Hope you could able to appreciate this discussion. As I earlier mentioned, let's say 1 lakh, 1 lakh, 1 lakh, 1 lakh every month was taken credit. Automatically IGST will be 12 lakhs, EGST will be 12 lakhs, SGST will be 12 lakhs. It's nothing but summation. It's clear summation. Then what are we going to do now? See, that credit which we have taken can be from import of goods, can be from import of services, can be from B2B purchases from another person, or it can be from any other source of purchases, reverse charge related purchases, whatever be it. I'm not stepping in. But the point that I want to drive here is that breakup need to be given over here. As this 94 lakhs which we see here, I need to give breakup how much is B2B, how much is inward supply on reverse charge, how much is going to be import of goods, import of capital goods, import of services, or credit transferred from IST. If all this information, if I feed and if I get at the end, fag end, a 0, then it's matching. Let me repeat. Looks little complicated, but actually it is not complicated. It is simple, largely simple. Where, in other words, I need to give breakup of the ITC claimed by me. If I have taken 15 lakh rupees of ITC, then I should technically provide bill for a value of 15 lakhs. ITC related to 15 lakhs. So that is how table number 6 has to be considered. Plus, in case any transaction related issue, credits are claimed, or in case where any money is what is it, or in case where any credit which is directly linked with a transactional credit, or by way of acquisition, merger, if one company is taken over by another company, all this will form part of the other credits. So those information has to be given and the gross ITC claimed will be matched. So let me repeat it. In table number 6, what we are actually doing is we are directly mentioning the year-wise number and segregating them based on the type of transaction. How much is import, how much is domestic, how much is local, all that are going to be breakdown. Table number 7, which discuss about reversal of input tax credit. What do we mean by reversal of input tax credit? As far as reversal of input tax credit or reduction of input tax credit or marking of ineligible ITC needs, no doubt that is an inward supply, but the person who is going to claim ITC is barred from claiming those credits. A classic example is, a lot of you are all viewing it from YouTube. Yes, my point here is, in case if you are viewing it from YouTube, you can use your chat box and answer to this question. A person who is in the business of buying laptop and selling laptop. A person whose main business is buying laptop and selling laptop. That person who does the main business, this person purchase a car, will he be eligible to claim input tax credit, or he is not eligible to claim input tax? Is he eligible to claim input tax credit or not eligible to claim input tax? Quick, a lot of you can answer in my view. Yes, as you all, many of you rightly think, the person is not eligible to claim input tax. Why? Not because the car is not used for business, not because there is a personal motive behind buying a car also, no doubt. But the point here is, it is not a business asset, it is a personal asset. Now, why I want to make this discussion over here is, in case of table number 7, in case of table number 7, which talks about reversal of input tax credit, where it discusses about various reversal. If a person failed to pay tax to his supplier within 180 days, then ITC need to be reversed. In case a person has transferred ineligible ITC, the same need to be reversed along with interest. In case if a person has claimed wrongly credit twice, because in manual credit availment every mistake is possible, or any data entry errors, all can be corrected at the time of annual return. Let me repeat, any errors you want to correct it, it can be corrected at the time of annual return. Same in the case of your transactions also. Any transactions you want to further clean it or further treat it separately, yes, it can be treated separately. Now, transactional credit and blocked credit, all information will be separate. In case No.
Hello, sir.
Ma'am, my presentation is visible.
Yes, sir. It is visible only.
Presentation is visible, huh?
Yeah, sir. Now it went off.
Not, no?
No, no. Now it is not visible, sir.
Now?
No,
One
sir.
moment.
No.
One moment. Now?
Yes, sir. Now it is visible. Okay, sir.
Yeah. As far as table number 7 is concerned, ITC to be reversed. There would be a possibility a person has taken some credits which are all ineligible in nature. It could be on civil structures, it could be on motor vehicle, it could be on expenses incurred for personal purpose. Government specifically says those credit related, those items or those items related credit need to be reversed as far as section 17(5) is concerned. Similarly, in case of transactional credit and any other credit, if in case something need to be reversed, yes, it will also be need to be reversed. So I'm sure when we would have discussed ITC, somebody would have told you if a person who is going to claim ITC, he need to ensure that he makes payment to a supplier within 180 days, failing which the ITC claimed need to be reversed along with interest. If we could able to recollect that discussion, same is what also happening here. Any person who visits, any person who is going to not going to comply the provisions, those persons ITC are getting reversed. So in other words, if I issue a bill and you're going to be the recipient, you have to make me payment within the time prescribed. Failing which, let me repeat, failing which, if they don't make the payment within the time prescribed, I am sorry, they have to reverse the input tax credit, a condition which becomes mandatory. So cases like that, person who use both input and input services, including capital goods for both taxable and exempted supply perspective. Let me repeat, if certain organizations are involved in exempted supply as well as taxable supply, it's going to be a really an Herculean task. Now, why I want to highlight in that way? Because why I want to say it is going to be a Herculean task, because take a situation that in today's business, every organization deal with variety of products. Sometimes some of their goods, some of their services are leviable to GST. Sometimes some of the goods or some of the services are not leviable to GST. In those circumstances, sometimes it happens, it do happens that those transactions are not leviable to GST. Maybe a best example could be a hypermarket or a supermarket where they are dealing in all kinds of goods, 5%, 12%, 18%, 28%, and nil rated. On all kind of goods, all kind of services they are dealing. Now, in this background, there will be a common asset. There will be a common raw material used for both taxable as well as exempted goods. A best in class example. Recollect your departmental store. In a departmental store, varieties of product are there. 5, 12, 18, 20. All variety products are there. But very interesting to note, a point of sale equipment. A point of sale equipment, the place where billing happens. They capture the data in the infrared or various models, and then the data entry happens. That point of sale equipment is commonly used for both taxable as well as exempted. Now, if a credit, input tax credit, is used for exempted supply, ITC is not eligible. That is what section 16 says. Section 16 comes out and highlight that ITC is not eligible in case if a person is going to be engaged in exempted supply. A next doubt come, I am not fully engaged in exempted supply. I partly engage in exempted supply, partly I engage in taxable supply. Then partly ITC need to be claimed. How to do that reversal? That reversal will be done as per rule 42 and ITC need to be reversed. For a minute, think like this. Maybe this example is a little old example. 1,500 rupees. 1,500 rupees is given as a charges to a person. Just 1,500 rupees is given as a charges to a person. Why this charges is given? When we go back and analyze, they are engaged in both taxable supply as well as exempted supply. It is an organization that is engaged in both taxable and exempted supply. They have to reverse a proportionate credit. Let's take some example. 4 lakhs of exempted supply this month they did as turnover. 6 lakhs of taxable supply this month they did as turnover. Hence, the exempted portion of ITC that need to be reversed will be exempted turnover divided by total turnover. Exempted turnover divided by total turnover. We will get the exempted portion of ITC that need to be reversed. Now you can go and analyze this example in a very great way. It could be your rent, it could be repair and maintenance, it could be individual partitions, it could be flooring, anything. The hypermarket, the supermarket is not eligible for full credit. Partly they are eligible for credit. Why partly they are eligible for credit? That is also we have discussed. Because a proportion of turnover is not eligible or not to be form part of this discussion. Followed by other ITC related information. A cross verification happens between the ITC claimed by the respective individual and the ITC that is appearing on the return. Automatically came, let's say 46 lakhs. What is there in the return is assume not 50 lakhs, 56 lakhs. 46 minus 56 minus 46. Balance is leviable to tax. So very specific discussion. Table 8. Table 8. Consciously discuss about it. Where table 8 comes out and gives what is the credit available as per 2A, 2A related information. If you carefully note here, as per 2A, what is the total credit? Of that credit, how much was claimed by that person, that it will be individually available. Then anything need to be added. We will do that and finally arrive a number. You can ask me why we need to do this activity. See, just we want to know how much credit. We have taken so much credit, but how much is getting reflected in the system. For that purpose only it is being farmed over here. Beyond that, I don't foresee any good reason why it should be farmed over. Followed by table number 9, part 4. Part 4, table number 9. Tax paid information is getting captured in table number 9. What is speciality about tax paid information? What is the tax paid during the whole year? That information is getting captured in table number 9. Okay. So whatever be the taxes that are paid, that's getting captured. Understand? Having said that, the tax paid information gets captured in table number 9. How much is CGST, how much is SGST, how much is IGST, all that information will get auto-populated, and as per now, tax payable, that need to be paid. See, definitely everybody tried to be complete when it comes to filing of return and everything, but it's very rare when it to be being little complete in certain activities. Now, why I want to highlight this discussion over here is in case of tax payments, there would be definitely a possibility that a transaction may be missed out for omitting. It's all happening, not this month, not previous month, some 5-6 months before. Are there any remedies available? Yes, there are remedies available. Based on that, it can be understood, adjusted, and kept as is. If in case after making lot of payment of taxes, interest, everything on its liability, if all the transactions are reported, then the tax payable and tax paid and the payable by the person would be matched. In case of any differences, in case of exactly any differences, only then this discussion becomes important. Otherwise, this discussion is not important at all. It's just tax paid details. Whatever we have circled in the red color, that information alone need to be data filled. Rest all is automatic, absolutely automatic. Transaction relating to 1890. But the transaction got reported in the books in the subsequent financial year. See, first of all, a transaction like this is little rare. It's not regular because everybody will be interested. What is it? Mention whatever they spent, whatever they receive in the respective account only. Interested in showing it to the subsequent person. In the same way, any transaction, any correction, they wanted to be done in the respective return. But at times we have no other option. At times we have to, we have to mellow down our calculations. So coming back here, table number 10, table number 11, table number 12, table number 13. We will have 4 tables. Let me repeat, 4 tables with a purpose, standard specific purpose. What is the purpose, sir? First purpose. If a transaction of a 1819 gets reported in 1920 return, then it will be reported in table number 10. Transaction of 1718 or 1819 gets reported in table number 15, then no doubt it has to be handled in a different way. What are all these transactions? These transactions are all completion error transactions. What do we mean by completion error transaction? You'll come across, you'll say, I'm working in this company and I've been asked to go to foreign country. So I will go to foreign country, all that he will say, a person. And he went to foreign country. Now, a few services are done to this person. Later on, as that other person was not available, people came back to this person, saw the vehicles, saw the aspects. A transaction of 1718 may be a transaction which is omitted to be considered in 1718 or 1819, got reported in the subsequent year, then it will form part of table number 10. A debit note of 1819 omitted to be reported, but subsequently it get reported, then it will form part of table number 10. Similarly, a credit note, in case a credit note that is going to be issued by the assessee to any of the supplier, yes, it can form part of the working. Why I want to highlight here at this juncture is it's something very interesting. Many times this is the decision making slide. Let me repeat, many times this is your decision making slide, and this decision making has to be made very careful moving forward. It looks little clumsy like this only. All those additions or amendments to supply for the period 1819 and the payment is made after or during 1819. One minute. A table number 10, table number 11, table number 12, table number 13 are informations which are relating to 1819 but got reported in 1920. Be it claim of ITC, be it reversal of ITC, be it output tax payable, whatever be it, all can be brought in under this table number 16, 7, sorry, table number 13, 10, 11, 12, 13. In these tables. Any tax payable that will get reported, nothing great about it. Table number 15 to 19 discuss about details of refund, how much is claimed, how much is sanctioned, how much is rejected, how much is pending. Similarly, after relating to refund, it also discuss about various documents that are generated under this GST. A HSN wise inward supply information, that is harmonized system of nomenclature. HSN, harmonized system of nomenclature. A 8-digit number is given for every product. Tax payable is based on that HSN number. Max and HSN number is the basis for it. HSN wise outward supply, HSN wise inward supply. That once you submit it, it will take to a logical conclusion of filing Form GSTR 9. That sums up our discussions on GSTR 9. I do agree. Some of the discussions might be little technical. Some of the discussions would have went on at a particular pace. Reasons are one in number, that it warrants a little technical elaboration. At this juncture, if any questions are posed or any questions are available online, only online, because we have a similar discussion like this for about more than 70 minutes on 9C. Then we can take it up together 9 and 9C question. Any questions on 9, if it is there and it is posted on the chat box, may be brought in over here. Let me repeat it. The overall path will go like this only. Initial disclosures, basic disclosure of transaction relating to 1819 or 1920, whatever be, that will get reported. Then there itself, how much tax payable, how much tax is not payable, that breakup, with that breakup it will get reported. When it comes to ITC, already fellows have claimed ITC while filing month return. When I sum up that monthly summary and put it, it will come automatically. Now, it's as simple as that. The consolidated number is went. Now I have to give breakup of each type of ITC how much, B2B how much, B2C how much, other than personal purpose how much, vehicle maintenance how much. I have to see the respective ITC and give a breakup of my ITC. Once breakup is through, the next aspect would be going back to the tax paid, whether the tax is right, everything is right. See, when every transaction is reported, there will be nothing. But in case one or two transactions is missed, that will be added and there will be a tax liability. That tax liability need to be paid. There is also a possibility that this year transaction might be reported in the next year by the supplier. At that moment, what best can be done is a transaction of this period got reported in subsequent period. It will go to part 5, table number 10. Previous financial year transactions is reported in subsequent financial year. It can be pushed there and it will be reported there, followed by a disclosure relating to refund, disclosure relating to other payments, plus other removals such as job work and other aspects. That would take us to a conclusion of table 9, annual return filed by every registered person whose turnover exceed rupees 2 crores, which is mandatory. To the contrary, alternatively, if somebody turnover is less than 2 crores, filing of annual return is not mandatory, it is only recommendatory, optional. So that sums up our discussion. At this juncture, we'll do one thing, we'll break for 10-15 minutes and then rejoin. Kaleshwari ma'am, any questions to take it up now?
Yes, sir.
Any questions are there to take it up now in the chat box? You are monitoring now.
Sir, they are actually posting it, sir. I think they'll be posting it in the end of the session.
Okay, we will take it up at that time. Huh?
Yes, sir.
Okay, thank you.
So
Will
shall we have
rejoin.
a break, sir, for 15 minutes?
Yes, ma'am.
Okay, sir. Dear participants, have a break for 15 minutes. Please join us back by 4:10. Dear participants, have a break for 15 minutes. Please join us back by 4:10. Excuse me, sir. Excuse me, sir.
Ma'am, I'll switch on the camera 1 minute.
Yes, sir. Yes, sir. We can start, sir.
Yes. Coming back here, post our discussions relating to Form GSTR 9, getting into Form GSTR 9C. As far as Form GSTR 9C is concerned, it has two parts. Part A, which discuss about a reconciliation statement, and part B, which discuss about a certification which need to be carried out by the GST auditor, who is appointed by the respective organization. As far as these discussions are concerned, as a reconciliation statement, it reconciles the turnover in the audited financial statement with Form GSTR 9. In other words, the number as per profit and loss account is cross verified with Form GSTR 9. So when we do an activity like this, we will come to know whether the transactions are matching or not matching. What is the situation? All this will come into consensus. Then part 3 discuss about a reconciliation of taxes paid. Part 4 discuss about input tax credit, breakup relating to credits that are taken, and in case any observation, any additional tax liability payable is discussed in part 5. Getting into the respective parts more specifically, a GST audit is applicable if a person's aggregate turnover exceed rupees 5 crore. If a person's aggregate turnover exceed rupees 5 crores, then GST audit is applicable. However, if a person turnover does not exceed rupees 5 crore, then GST audit is not applicable to that person. As part of GST audit, what are all will be reviewed during the audit by the GST auditor? The GST auditor will verify the various returns filed by the person. The GST auditor will verify various returns that are filed by the person. Followed by, he will also ensure whether necessary books of accounts which need to be maintained are maintained by the respective person. Whether wherever applicable, the necessary books of accounts which need to be maintained are maintained. The GST auditor will also ensure whether the annual return is filed properly and correctly, whether in table number 4 have they disclosed the outward supply on which tax payable correctly, table number 5 have they reported the exempted turnover correctly, breakup for ITC, is it matching with the credit that is taken, followed by wherever they have reversed the credit, have they reversed it correctly? All that will form part of the GST audit. A mere verification or a review will happen. ITC availed by the person and the exemptions claimed by the person. Is it proper? Is it valid? As he claimed the exemption correctly? In case a person is claiming exemption, whether that exemption claimed by the person is valid or not, all that need to be verified by a GST auditor. I can give you an example at this moment. One of the client was whose main business is into curing of coffee. They were in the businesses of coffee curing in Coorg. The assessee was of the view that coffee curing activity is exempted from GST. And they were not paying taxes. We went and highlighted to them, see, nothing of that sort. No doubt curing is exempted, but all those curing done at a agricultural farmland is exempted. Here in your case, a curing is done in a factory location. We are of a view exemption is not eligible. In any case, first 2 years matter went on litigation and later they made it subsequently. They start paying it subsequently. Now the question for us is, in case of transactions relating to, in case of ITC related matter, or in case of all these exemptions, they should ensure necessary compliance are complied with. Similarly, have they classified the goods correctly? Is it properly classified? That will also be form part of the GST auditor's view. And review of reconciliation statement or preparation of reconciliation statement and express correctness, completeness of GST audit. Now, all this form parts of the respective activity. Like earlier, some basic informations are getting captured. Once the basic information is captured, after the basic information, a reconciliation need to be done. A reconciliation is done between financial statements and form GSTR 9? What are all the probable adjustments that are possible? Maybe unbilled revenue, unadjusted advances, any discounts or credit notes given without GST effect, or it is going to be a deemed supply as per schedule 1. What do we mean by deemed supply as per schedule 1? Is the stock transfer, branch transfer. Generally, those numbers are not forming part of the P&L. In case if it forms part, if it does not forms part of it, then it has to be added. So I would start with the P&L number. If all the turnover are reported and everything is matched in a small organization, both will match. But it is a little large organization. They have variety of reasons. Yes, there will be different reasons. There will be a reason for forex difference. The forex difference is this: as per AS 11, we have to account foreign currency exchange income or foreign currency expense. In case if it is a foreign currency income, that has to be reported. In case of any adjustments that need to be carried out as per section 15, then 15 talks about valuation as per section 15, that should be taken. For example, we will start with the number as per profit and loss account. If any unbilled revenue at the beginning of the year or unadjusted advance at the end of the year, that will be added. Similarly, unbilled revenue at the end of the year and unadjusted advances at the beginning of the year will get reduced. That addition, deletion, all that will happen. Followed by, in case goods are removed by a SEZ to a DTA unit, then that information will be captured. Let me repeat, 99% of the cases, the balances will match. In case if it does not match, there can be only two reasons. One, that turnover is not reported in 9, however is there in balance sheet. Or that turnover is reported in 9 but not there in balance sheet. Will there be reasons for both? Yes. I'll give you an example. 10 lakh rupees exempted supply made by the organization, not reported in 9. 9, table number 5, technically they have to report exempted supply, but they have not reported. When you compare it with your final financial statement says a turnover of 2 crores 50 lakhs, whereas the 9 number says only 2 crores. What is the 50 lakhs? When we go back and refer, it is nothing but exempted turnover, of course not taxable, but omitted to be considered in 9. Technically, now we all know in table 5, exempted turnover should be added, but they have omitted and filed it. Now nothing can be done. We will have a difference of 50 lakhs. Take a ulta situation. The turnover as per 9 is 2 crores. The turnover as per P&L here is 1.5 crores. There is a gap of 50 lakhs. What is this gap of 50 lakhs? Very interesting to note. When we see the balance sheet, we see sale of machinery, 50 lakhs is there. Done. Sale of machinery. Sale of machinery in accounts is a balance sheet item. Sale of capital goods is a balance sheet item. So what would happen is nothing. In the other adjustments, 5O, it would be added. We will add here another 50 lakhs. So 2 crore 50 lakhs, again 2 crore 50 lakhs. It will get matched. So my intention here is, if there are differences, reason for such differences need to be explained and commented upon. Why? What is the reason for difference? Similarly, what we have now arrived is only a gross turnover. We are yet to arrive at taxable turnover. To arrive at taxable turnover, from the previous column, the gross turnover is picked up. 175.13, 109. Come back here. From this is table number 5P. Okay. If you come back here, it will say 5P. See. The aggregate turnover after adjustments from 5P is brought in here. Value of exempted supply, nil rated supply, all that are getting removed. That is supplies on which tax is not payable. They arrive at turnover on which tax is payable and compare it with table number 4, recollect, of 9. When you compare, if both matches, matter ends there. In case of differences has to be explained along with the reason associated with it. What could be the reasons here? Actually, supplier did a turnover of 1 crore 75 lakhs, but erroneously they have reported only 1 crore 50 lakhs, paid tax for 1 crore 50 lakhs, and in GSTR 9 also they reported 1 crore 50 lakhs and filed the return and gave it to the auditor. Auditor now sees, as per balance sheet, 1 crore 75 lakhs. As per computation turnover, 1 crore 50 lakhs. There is a gap of 25 lakhs. When the gap of 25 lakhs comes, he claims a remark saying that the said amount is leviable to GST at 18%. Or to the contrary, one minute. To the contrary, numbers are analyzed. Now, if you carefully note down here we have a reference of 4n minus 4g. Okay, just for your information. At that time, if I would have told, it would not be little interesting to us. That is why I never told. This is part 2, GSTR 9, table 4. Okay. Breakup of B2C, B2B, exports, SEZ, deemed exports. Information are given. See here, I am referring. This number will be cross-verified in GSTR 9C, table 7F. Come back here. Here also I am referring C. GSTR 9C, table 5Q. Now, why I want to highlight is 9 numbers are brought into 9C and then the reconciliations are done. Come back here. This is what I wrote. 5N of 9. There, this table 5P. Coming back here. 4N of that. Here it is going to be what? 7F. Why I want to highlight this, we arrived at taxable value and there is already a taxable value on which tax paid is reported. If both matches, matter ends there. On the difference, tax is payable, no doubt. we have to bifurcate into respective rate of tax, how much they have paid, 18 and 28. RC stands for reverse charge. In case a person liable to pay tax under reverse charge, then no doubt, then absolutely no doubt, it will get reported here. But let me remind here, we will not consolidate the value column here, but we will consolidate only the tax column here. This is the first time rate wise breakup is asked in the whole working. All along, if a person says I made 1 crore 75 lakhs taxable supply, government used to say yes, 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 yes. Now give me the breakup for 1 crore 75 lakhs. What is it? 5% turnover how much? 12% turnover how much? 18% turnover how much? 28% turnover how much? Give me a breakup. Once you give me a breakup, and then also give me a breakup of how much CGST, SGST, IGST you have paid, so that I will compare it with my tax already paid. See, the turnover is getting compared, the tax paid is getting compared. Later you will come across ITC is also getting compared. So all informations are getting compared over here. A nice modality wherein which what is the reason, what are the reasons, what made you to pay this tax at 5% or 12% or 18%. That is again cross verified with form 9, table number 9. If the tax payable and the tax paid both matches, matter ends here. Take a situation, a 10 lakh worth of turnover was not reported. It got identified now only, and you have a difference in table number 8, which says rupees 10 lakh worth of turnover is not reported. Obviously, you will have a difference here. Why? Your CGST and SGST will be reduced by 90,000. Sorry, 9,000 rupees, 9,000 rupees. Sorry, not 9,000, 10 lakhs we told, no, 90,000, 90,000. Why I want to highlight this? Because what he has paid tax will be less already month on month. What you are now computing will be on the high side. That differential tax has to be paid by the person immediately, so that the additional liability will not be determined by the GST officer. In case if the GST officer fail, in case if the GST auditor failed to report this, it would be a little difficult. Or if the assessee has accepted and paid the tax, reporting will not come here. Because once again, the liability will get matched. If he has not paid, then yes, it would be form part of table number 11. Table number 12, 13, 14, 15 and 16, all those 4 tables discuss about input tax credit at the first level. As per books, what is your eligible credit? As per GSTR 9, how much credit you have claimed? Okay. Both information are cross-verified. As per books, what is your credit? From the books of accounts of the assessee, we can able to determine what is the credit that they have claimed. That credit is compared with the credit taken by the person. As per books, credit can be taken for 21 lakhs. Assessee has also taken a credit of 21 lakhs. No difference. books, assessee can take credit of 21 lakhs. Whereas assessee has taken only credit of 20 lakhs, 1 lakh difference. Why need to be analyzed? 2-3 reasons. Maybe that credit relates to last year claimed now, or this year credit claimed in that year, or it can be a excess credit claimed by the assessee also, not as per books. In those circumstances, the additional tax has to be paid through a form called as Form DRC03. Form DRC03 is nothing but a tax that will be additionally paid. Additionally, it can be paid using this form only for GST annual return and GST audit. Taxes can be paid through government, paid to the government. A breakup is obtained, a breakup of ITC, each expenses wise. No doubt 21 lakh credit is there, but that 21 lakh credit purchase is how much? Freight or carriage is how much? Credit on account of power, imported goods, rent and insurance, how much? ITC relating to royalty, goods lost, employee cost, conveyance is how much? And entertainment expenses, statutory charges or stage printing and stationery charges, other miscellaneous expenses how much, and capital goods how much. A breakup is as given. Plus there can be different expenses head. You are allowed to have 5 heads. Any other expense 1, any other expense 2, 3, 4, 5. Beyond 5 not allowed, sir, not allowed. A breakup can be given and attached. Idea here is each expense how much credit. Look out here. 1,33,86,762 worth of goods was purchased, and on that ITC of 19,11,618 was claimed by the company. This ITC claim will be cross verified, and along with Form GSTR, Form GSTR 9 Table 7. If everything is matches, no issue. In case of differences need to be explained with the help of reason. Any wrong credit availment, wrong utilization of credit, assessee has failed to reverse the credit wherever, or has taken the credit twice without even the document has taken credit. In all these circumstances, credit has to be identified and those input tax credit has to be reversed. Once that is over, the GST auditor will come up and review various documents. Let me repeat. Sir, what documents he will review? For example, to start with, as a GST auditor, he has to first certify whether a tax invoice is issued by the organization. Section 31 read along with Rule 46 says tax invoice means it has to be like this only. And tax invoice in case of goods has to be issued at the time of removal. Whether at the time of removal the tax invoice is issued. In case of services, whether the tax invoice is issued after completing the service within 30 days will be verified by the GST auditor. Next, whether tax invoice contains those name of the supplier, address, GST number, name, address, GST number of recipient, invoice number. Invoice number can be maximum 16 digit only, date, whether it is properly signed by the authorized signatory. All this information will be covered, followed by in case of the discussions, whether these documents are covered has to be brought in, followed by post this discussion, he has to verify various other documents and returns such as Form GSTR1, Form GSTR3B, Form GSTR9C. Form GSTR1, a monthly return filed by a registered person reporting B2B, B2C, export with payment of tax, export without payment of tax, SEZ supply, deemed export transactions, advance received, advance adjusted, debit notes, credit notes. Whatever we saw, no, all that on a month-on-month basis will be reported in Form GSTR1, Goods and Service Tax Return number 1. That is what is called as GSTR1. Similarly, month-on-month, for tax payment, a summary return is filed. GSTR1 is a detailed return, transaction-wise return. But GSTR3B, Goods and Service Tax Return, GSTR3B is a monthly return which is filed. Whether from April 18 to March 19 it has been filed, and information from that also will be captured and brought in over here by the person. In fact, by scrutinizing the 1 and 3B only, the GST auditor will come to know whether he is engaged in taxable supply as well as exempted supply, followed by how he is doing it. All that will be verified. So documentary aspects need to be verified. Compliance, monthly periodical compliances, documents to be verified, plus various input tax credit is taken by organization. Whether that input tax credit is used for business, whether their business has both taxable and exempted. I am not talking of very big companies. I am talking of a very small company, a kirana shop, a departmental store down south, up north, or northeast. We have varieties of departmental store. The departmental store is engaged in both kind of supply, taxable and exempted. They pay a rent for the shop. I'm sorry, they are not eligible for full credit. Sir, why, sir? Section 16 very clearly says, read along with section 17 too, if you use a service, if you use a goods for both taxable and exempted, you are entitled to claim credit only to the extent of taxable. You are not entitled to claim credit to the extent of exempted. So, whether credit are claimed based on proper documentation, those documents should be verified by GST auditor. Plus, the GST auditor is also responsible for the correctness of ITC claimed. Whether ITC claimed by him, is it valid, proper? Yes, that can also be verified by the GST audit. Followed by a few more areas to be verified are place of supply. Let me repeat it. A very crucial topic, because place of supply only decides whether a particular transaction will be covered under interstate supply or a particular transaction will be covered under intrastate supply. Is it an interstate supply or intrastate supply? That is decided based on place of supply. How, sir? Section 7 of IGST Act comes out and highlight, if location of supplier and place of supply is in the same state, then it will be a interstate supply. If location of supplier and place of supply is going to be in different state, then it will become a interstate supply. So for many transactions, we have a separate discussion on place of supply. Place of supply is important. Why? Because it looks like place of supply is another situation. For example, supplier is in Tamil Nadu, recipient is also in Tamil Nadu, but the recipient has instructed the supplier to deliver the goods in Andhra Pradesh. The supplier went to Andhra Pradesh, delivered the goods in his lorry, come back and sent the bill to his recipient in Tamil Nadu. Very popularly, we call this transaction as bill to ship to transaction. Bill goes to one location, goods goes to another location. Many times we would have done this with Amazon or Flipkart, where we would have asked the Amazon to send a bill to us and the goods to our friend or somebody else. In a bill to ship to transaction, the place of supply need to be decided based on where the bill goes. Normally, the place of supply for goods is based on where the goods goes, where the movement terminates. If it is a normal situation, we would have told the place of supply is AP. Because it is a bill to ship to transaction, we are now concluding this transaction is not AP, place of supply is AP. This transaction, it's a bill to ship to transaction. Billing happens in Tamil Nadu. So place of supply is Tamil Nadu, 10(1)(b) of IGST Act. A specific discussion. Now, why I want to highlight it is, if somebody would have erroneously marked as Andhra Pradesh, location of supplier Tamil Nadu, place of supply Andhra Pradesh, they would have paid IGST tax. But unfortunately, location of supplier Tamil Nadu, place of supply is also Tamil Nadu, because where the billing happens, Tamil Nadu, it is an intra-state supply. In other words, assessee has paid IGST. Actually, assessee has to pay CGST and SGST. Sir, how I can identify all this? See, it all happens by sample verification done on the assessee's books. That's what. Not only reconciliation is audit. After reconciliation is done, all this will be verified. Documentation, GST return, place of supply. 2-3 more aspects. Valuation. Section 15 comes out and highlights whatever money collected will be included in the value. So what do we mean by whatever money collected will be included in the value? For example, take a situation like this. Somebody supplied the goods. After supplying the goods, the recipient told, kindly deliver the goods in my location. I'll give you delivery charges. A delivery charges of 2,000 rupees is collected. Now, tax has to be paid on the product cost 15,000 or on 15,000 plus 2,000. A genuine doubt will come. And let me repeat it, in a pre-GST regime, before GST regime, there are decisions that you pay tax only on the product cost. But unfortunately, in valuation, section 15 clearly says whatever money additionally collected by the supplier will form part of the value. You may come across a difference tomorrow when you compare your balance sheet, when you compare your P&L with form GSTR9. P&L says 14,50,000. This for my information I'm taking up. GSTR9 says only 14 lakhs. What is this gap of 50,000? Transportation charges not considered. Valuation issue. Now it's responsibility of the GST auditor to ask the supplier to pay tax on that 50,000. Is that is all valuation issue? You have many things. I'm just giving you one lead only on every topic, because all this need to be verified by a GST auditor. Classification, rate of tax, whether the product will get covered under 5%, 12%, 18%, or exempt. If a product is a UTH milk, ultra treated, high temperature treated milk, UTH milk, it will be leviable to 5%. If it is a flavored milk, it will be leviable to 18%. But the process of UTH milk and flavored milk is almost the same. Let me repeat, almost the same. If they have wrongly classified, it is the responsibility of the GST auditor to ensure the rate of tax is correct. If it is a hair oil applied, coconut hair oil, liable for GST at 18%, 18%. If it is an edible oil, coconut oil, it is liable for 5%. Coconut oil 5%. In coconut oil, for what purpose? Some additives were added. They get a nice fragrance, and it is largely used as a hair oil by various people. Then the rate of tax becomes 18%. I want to make a submission that classification of goods should also be verified. So on all these matters, when he has a reconciliation statement, see, reconciliation is one job, not the only job of GST auditor. Plus, in each of these areas, he has to take at least sample records, verify, ensure the nature of supply, classification of goods, valuation of goods, wherever ITC claimed are proper, wherever documentation are there, those documentations are correct. All this, let me repeat, all this are correct, complete. Then based on that, he will issue a certificate which will be digitally signed. If he has any observation, he may attach an observation report to the certificate and file the writ. So that sums up my presentation relating to Form GSTR 9 and GSTR 9C. Any questions that are there? Yes, I would take it.
Sir, two questions I have posted in the chat box, sir.
Yeah.
Yes. Dear participants, if you have any queries regarding the sessions, kindly post it in the YouTube chat box.
With regard to speaker one, yes. Now, for the first question, for 1920, is it necessary to file annual return less than 2 crores? I think I've initially clarified. We received a notification very recently that for 1920 also the relaxation continues. So any assessee less than 2 crores will get exempted. 2 crores to 5 crores annual return alone, 5 crores and above only annual return and GST audit. So less than 5 crores also people are going to get relaxed from GST audit. So what current position for 1819, same status quo is maintained for 1920 also. So that is going to get continued. Full form for all these 3B, 9C and all is nothing great. GST return 3B and GST are 9C. Okay, so those are all going to be the full forms associated with it. Yes.
Yes, sir. So we'll wait for a few more minutes, sir. If they have any
Yes.
queries,
Yes.
I will post it in the chat box, sir.
Yes.
Dear participants, it is for your kind attention. If you have any queries regarding today's session, you can post it in the chat box. Dear participants, if you have any queries regarding the today's session, you can post it in the live chat box. If you're really impressed by the today's session and if you don't have any questions, you can post that also in the chat box so that we can know that you don't have any questions regarding the sessions because of the extraordinary sessions given by Ganesh sir. Dear participants, we are waiting for your reply. If you have any queries, you can post it in the chat box or else you can give your comments in the chat box. That is the YouTube link, sir, which is going live.
Sorry, I was searching for that only. Yeah. Yes.
So there is a question in the chat box, sir.
I have collected, this is a question from Narayan and Vishwanathan. I have collected a commercial rent from my customer.
Which is going live.
Sorry?
No, sir. So you can continue, sir. You can continue. You can continue, sir. There is some kind of disturbance. I don't know from where it is.
This is a question from Narayan and Vishwanath.
Just a second, sir. I'll see.
No. It's square lashing.
Okay,
I'll,
sir.
uh, I think it's question from Narayanan sir. I have collected commercial rent from my customer for each and every month showed in GSTR1, but unfortunately I didn't paid rent more than 6 months. Shall I? He didn't pay the rent more than 6 months. Shall I reverse the tax? Nice question. See, this is one challenge that we are facing in the commercial rent industry over the last 6 months, preferably post pandemic. Uh, Initial 1-2 months it was waived because of various reasons and grounds, but even then the business has not picked up to certain levels and extremes which has been expected by certain organizations. But any case, now sir, I would recommend one. There is a model for this. If you have agreed with your who's taken the property that he will not pay rent, if you are very sure that he will not pay rent, or if he asks some kind of waiver, you can pass through that by way of a credit note as because of renegotiation in your value of supply. Because as per the rental contract, monthly 1 lakh, we would have automatically raised invoices. But he would say, sir, testing time, business is not there. I would give me a flat reduction of 30% for the whole year. Some people will say, Some people will say, waive my 3 months rent. Some people would come out and say, no, give me 10% discount, but for whole year. But for 6 months, you have filed the return continuously, filed GST R1, paid the taxes through GST R3B. Now, what best can be done is only one thing. A credit note can be issued by you, so that reflecting this, so that he will not be entitled to claim credit. He has to reduce the ITC in case if he has claimed. Two, you can adjust that money with your subsequent tax payable. So subsequently, if you are not at all going to pay tax, you are about to close down your operations, then at the last moment, at the last mile, it can be taken as a GST refund. Prior to that, nothing would be possible. So a credit note would be a solution, provided adequate subsequent taxpayer. Adequate documentary evidences. Adequate documentary evidences would be of good help. So those are all my views relating to this. Yet another question by Madhu Shalini, ma'am. Can any CA or CMA holding COP can do GST audit, or is it required to be registered as a GST practitioner? See, any CA, CMA can do GST audit. It is nowhere said. It is nowhere said that it has to be handled only by they have to be a GST practitioner. No. As long as it is a CA or a CMA, they can comfortably do a GST audit. Yes.
Dear participants, you can post your questions in the chat box. So there are two more questions in the chat box, sir.
1 minute. Yeah, I'll see. Brief on 9C, correct? Is that question, ma'am?
Yes, sir. Yeah.
On 9C, correct? No?
Yes, sir.
Yes, ma'am. Now, coming back to Form GSTR 9C. See, it's a statement. It's a certificate cum reconciliation statement filed by a GST auditor for after conduct of GST audit on behalf of a particular registered person. So it's a particular form. The form number is 9C, and GSTR 9C we call it because it's goods and service tax return number 9C, which is what the reconciliation statement between the financial statements and GST annual return. Or let's take up a situation, the ITC claimed by the person as per books compared with the ITC reconciliation statement as per books compared with the ITC claimed, or it is going to be the tax payable as per books and as per the return. See, two independent events: reporting to the government and what is as per books. Look from a little government perspective, where government is not aware whether this particular registered person is reporting correctly or not. Where GST auditor steps in, tags both number. What is reported to GST department is tagged back to his financial statement and ensure it matches. For that purpose, a statement that is used, which will be called as the GSTR 9C. How to adjust the previous year inputs in GSTR 9? Nice question, Narayan Vishwanathan sir. I'll go back from Form 9. What will impact you? In Form 9, table number 6, discuss about input tax credit. In that input tax credit, actually it is a 17-18 financial year bill, but credit was claimed in 18-19. So technically in table number 9, table form GSTR 9, table number 6, this information will come. We would put that information in table number form GSTR 9, table number 6. Now, this information will be cross-verified in table number 11. Not 11, 12. Table number 12 of form GSTR 9C. With an example I will take so that it is understandable for all of us. When it comes to this discussion, 15,000 rupees is my total credit. Of 15,000 rupees, 1,000 rupees is last year ITC. Balance 14,000 rupees is this year ITC. So in table number 6, I will give breakup. I have taken 15,000 credit. I'll give breakup for 15,000 credit. Nothing will happen. But table number 6, less reversals. Let's assume for our convenience, no reversal. So end number 7J, table number 6, credit taken 15,000. Reversals will talk from A to I, no reversal. So 7J, net number, availment minus reversal, net number will be again 15,000. This 15,000 will be cross-verified in table number 12 of form GSTR 9C. In table number 12 of form GSTR 9C, when we cross-verify it, books will show only current year claimed credit 14,000. No doubt about it. But in my last year accounts, I will have a closing balance of 1,000, which I will bring it here. Last year credit claimed now. If you carefully get into that table, because you highlighted this issue, a very specific issue and a very unique issue, unless and otherwise we have a little hands-on working experience, appraising this issue itself is little difficult. Yes, this is the table I was referring to. If we carefully note here, ITC as per audited financial statements, I will have my 14,000 number comes in. ITC booked in earlier financial year, but claimed in current financial year. Narayanan sir, 12B. Here, in our example, this will be 14,000, this will be 1,000. I'll give you one more option. As per books, it might be even 18,000. 18,000. Why 18,000, Mr. Ganesh? No. For 4,000 rupees credit, you have claimed subsequently. So, which means 18,000 plus 1,000. Last year ITC claimed now, less this year ITC claimed subsequently. Possible? This year ITC claimed subsequently. Yes. We will be disclosing all these information. We will be disclosing all those information. Last year ITC claimed during current year. This year ITC claimed during subsequent year. When we disclose it, we will finally get 15,000 and it would match with the total, and we will zero down, or we will come to a concluded zero number. So in my view, yes, it is certainly possible. A very nice question, certainly possible. Yes. So I came out of the chat box. There was one more question, right, no ma'am?
Yes, sir. Another participant has also posted one more question, sir.
Okay. Madhu Shalini ma'am has raised a question. Supplies made to ACZ with tax has been shown under outward supply, but has to be shown under zero rated supply in 3B. How to rectify the same? Madhu Shalini ma'am, a very genuine question. This is, many times it do happen. If a transaction which is made to SEZ, it has to be grouped under zero rated supply. However, in case if it is not reported over there, the only place to correct it is during annual return. In annual return, table number 4, if it is with payment of tax, or table number 5 without payment of tax. Respective month 3B cannot be correct. Let me repeat, cannot be corrected. Respective monthly return. See, one of the, I would say, disadvantage of Form GSTR 3B is no amendments of 3B is possible, no revision of 3B is possible. That is a disadvantage of 3B itself. So that month, what error is committed and filed, it's filed. Nothing can be done about it. But meticulously, when an annual return is filed, they need to ensure they need to carve out that number and put it in table number 4D, table 4D, which talks about supplies made to SEZ with the payment of tax, or table 5B, zero rated supply to SEZ without payment of tax. Because you have not mentioned with payment or without payment, I am assuming and providing solution for both the situations, followed by. And this error is done during Jan 2020. Oh, if it is done in Jan 2020, then you can take up this question, take up this correction during annual return of 1920. That is next annual return. This error can be rectified. That is the only way out. No other option. Either it has to come in 4D with the payment of tax, or 5B without payment of tax, zero rated supply, which is nothing but we have reported as 1 lakh normal turnover, 10,000 SEZ turnover, 1,10,000 in B2B. You are now carving out it and putting it in the respective buckets, which is allowed. It is with payment of tax. Then it has to go to table 4. That's all. Table 4 of GSTR 9, and in table 4, 4D, which discuss about that. One of my client, Narayanan Vishwanathan, has raised a question. One of my client for the month bills, for the month of bill is July 18. He filed in March 20. Shall I claim the ITC for 2021? Bill dated July 18. Narayanan sir, bill dated July 18. Time limit for claiming July credit expires by September 19. So when he report is irrelevant, but as long as the bill dated is July, the claim of credit will be at riskiest position, because section 16(4) comes out and highlights that credit has to be taken in case of all those B2B transactions before filing of annual return for that particular year, or subsequent financial year September return filing due date. Of these two, whichever is earlier. So he reports July transaction in March. That is his stake, but your credit will not be, your client's credit will not be assured here. It's time barred.
Dear participants, if you have any queries, you can post it in the chat box. We are waiting for your reply only. Dear participants, so there is another question, sir.
1 minute. Dr. Balaji Bovi sir, Dr. Balaji sir, actually, technically speaking, there are no document as a proof that the supplier has paid the tax. Technically, that is the real fact. But if the supplier has reported the transaction to government, if the supplier has reported the transaction to government, then as a recipient, my form GSTR 2A, form GSTR 2A will be reflected. If Dr. Balaji sir has obtained a GST registration and sold goods to Ganesh Prabhu, once Balaji sir upload his outward statement, which is form GSTR 1, file with the government, automatically my Ganesh Prabhu's form GSTR 2A will have an entry purchases from Mr. Balaji, and the amount will be there. So point here for our discussion is form GSTR 2A is a information provider. that the transaction got reported in the government system. And if that return is filed, we will also get a confirmation return filed. But whether that fellow has paid tax to government or not, as a recipient, strictly speaking, I am unable to confirm. Why? Because what was envisaged at the time of implementing GST in certain aspects that was not implemented. We have that challenge. We do a cross verification in other ways. We mention his GST number and pull out certain reports which says he has filed Form 3B. It is an assumption only. When somebody has filed Form 3B, then I think he has reported my transaction and paid a tax. And at this moment, I also keep remind you and keep post you, sir, that there are good number of assessees who has filed only one and not filed 3B at all, not yesterday, today and all, from 2017 till 2020. I'm talking of 3 full years. Do we have assessees? Yes. I have personally faced for some of our clients these issues. So it's responsibility of the recipient. When a recipient see this kind of issues, he need to intimate his jurisdictional officer and my jurisdictional officer. In other words, the supplier's jurisdictional officer also should be intimated, and my jurisdictional officer also should be intimated, just to protect my scheme. Tomorrow, government should not come out and say, because I know when I put his number, I see only GSTR1 is filed, 3B is not filed, which means he has not paid tax to government. That is the only proof we have. Transaction wise, which was expected at the time of GST implementation, is still under pipeline. Now we have another models, we have new forms coming in, new modalities coming in. Maybe that would support us, we believe. Narayanan sir, the section is section 16, subsection 4. Section 16, ITC, subsection 4 discuss about the time limit. So that the section is the time within which input tax credit has to be claimed.
Dear participants, it is for your kind attention, please. If you have any queries, you can post it now also. or else we can end the sessions. So I think the question sessions are over, sir.
Thank you.
Yes, sir. So thank you so much for being with us today, sir. It is our pleasure having you today. And it's glad that you have been spending your 3 hours of time for us and explaining and sharing your entire knowledge with us.
Thank
So
you.
thank you so much for being with us, sir. On behalf of School of Commerce, Bharatiya University, and Dr. M. Jagadishwaran, sir, and all the enthusiastic participants watching on YouTube Live, I wholeheartedly thank you for today's session, sir. Thank you so much.
Thank you. Thank you. Thank you.
Dear participants, thank you for being with us. So we'll meet up for tomorrow's session, and that is the final sessions of the GST Phase 3. So we'll meet up tomorrow. Thank you all.